Emini Playbook 7-minute market recap going into the recap of October 9th, 2005. We are starting with our daily activity determining the mood of the market for today. Again, starting with open, high, low candles, the left side being the open, the right side being the close. We are observing activity going into today's market that has been a consistently upward incline in the market going back to August of 2025, September up on the incline, October up on the incline. So our market mood is definitely a trend on the daily chart. So that is the mood. Going into the activity of the day, today was a very good example of market jitters and also trading with control of emotion. Even though we were seeing the upward trend on the daily chart, we are getting into an area of exhaustion. We are at all-time highs on the E-mini S&P 500. We are going at 6,800 very, very hard. So with the trend being so dominant for such a long period of time, it is usual for the market to take a pause at certain price levels and at certain zones. So that gives great confidence going into the daily activity for a potential short trade. However, we would need to see the intraday market activity lining up with a short. So going into the market open this morning, 9:30, we are seeing downward activity going into the New York session. This gives us some confidence that there are potentially short trades available. Intraday market, in consideration of the daily market, gives us the play for today. So the exercise in emotional control came as we entered into a short trade at 10:45 a.m. after seeing this downward activity. As soon as that trade was entered, we saw the market reverse going back upwards. At that moment, we have the opportunity to consider the upward trend and the consideration that the market may be going back into that upward trend, or we can rely on our tools to let us know where we are in that process. So the statistical tools that are being used are basically average prices. We are looking at the recent price activity and we are plotting zones to let us know what is out of the ordinary. So as this trade goes in reverse and the numbers go very deep into red territory as they did, we are seeing our protective barrier stay consistent. We are able to put a stop loss above this area because of the safety that it provides, but we can rely on this as a boundary to keep us out of emotion. Emotional trades cloud logic, and logic is the enemy of a consistently profitable trader. So our barrier allowed us to stay in this trade, and eventually we were able to get out at a safe point around 11:30. So about an hour of painful activity, relying on our market tools, having several opportunities to close out the trade to reduce the loss, but relying on the tools keeps us in the place of making a in the moment decision. This worked out barely, but it did work out, and it is a statement of the tools being used. So, looking at the rest of the day's activity, we do see that the market does come back up around 10:30. Then when it dips down, we were able to get out, and then it comes right back up. So very inconsistent morning. And then as the afternoon progressed, we see the market continuing to go down. So we are seeing signs that the market does want to come up off of the upward trend that it's been in for the last few months. When we get days like this, when we are seeing downward activity with conviction and follow up, that does give a sign that there are potentially short trades opening up, which is good to observe. However, as they open up, we rely even more on our intraday market tools. These supply and demand zones were drawn after the fact, so they weren't very dependable intraday, but looking at the market afterwards, we were able to see how the supply and demand zones charted as the market trickled down. And so we have this very strong support at 67.60, and as we're going into the overnight session, we're seeing upward activity in response to today's downward activity. So we're seeing a very interesting battle between the bulls and the bears today. The market dynamics being that the bulls have been in control for such a long period of time, it does give opportunity for bearish activity to come in. So being overextended to the upside gives a danger of looking for long trades, and also being in an upward trade for so long, an upward trend for so long, going to the short side does give a significant amount of risk, because if the market decides to go back into continuation, which is where it has been for such a long period of time, we'll get a lot of snappy activity. So very interesting market today. A good example of trading without emotion. Another opportunity to rely on our intraday tools, not being afraid to take a loss, not being afraid to let the red activity build up in anticipation of our final outcome. Looking forward to tomorrow's activity. Going into Friday, we are looking to see a possible continuation of this downward trend. So hope everyone traded well and have a wonderful evening.